Hello you, welcome to today's backtest video, and the backtest video is going to be on February 6th, that's on Friday. But before we get to it, I want you to take note of this run up in price, to take out this buy side liquidity, running out these highs and these highs. Okay, they are relative equal highs. Okay, so price was unable to take out this high. Then you can see the drop down in price, okay, down to this volume imbalance, this daily volume imbalance. Like I said, volume imbalance is the gap between the body of two different candles. So you can see the gap between the bodies, ignoring the wicks. You can see the gap, okay, between the two bodies. This is the body of this candle and this is the body. Okay, so you can ignore the wicks, the gap between the bodies of the each candles, okay, of the two candles. That's your volume imbalance. And it's also a type of inefficiency, okay, which price draws to. And you can see how price respects this volume imbalance before going up, before rallying up on Friday. Okay, you can see the wick traded through the volume imbalance, but you can see the body of the candle respecting the volume imbalance, okay, before it rallied up. So our backtest is actually going to be on this candle, which rallied up, okay, this up close candle on 6th of February, Friday. So let's get to it. So you can actually see the run up in price after trading into the volume imbalance. Here's the volume imbalance. After trading into this volume imbalance, it rallied up into another inefficiency, okay, this CB right here, sell side imbalance, buy side inefficiency. It was unable to trade into the Wednesday first presented fair value gap. These are key levels, which price normally rallies to. And this too faint. I don't like this color. Okay, this is that. Okay, this is the inefficiency which price traded into on Friday. So let's study the run up in price from the volume imbalance up to this point, and you can see at the just below this orange rectangle right here, this inefficiency which you saw at the 4-hour chart. This is the 1-hour chart. Below it, you can see relative equal highs, this high and this high. If I drop down to the smaller time frame, you see it clearly, like the 15-minute time frame. These are your relative equal highs, okay? And price runs up to take out relative equal highs, runs down to take out relative equal lows, highs, lows, and then trades into inefficiencies, okay, and gaps. Now this is a 15-minute time frame. Why price dropped into the volume imbalance, okay, you can see this rally up in price, okay, leaving open this fair value gap right here. So if you notice, during this run up in price took out this high and this high, okay, then formed this fair value gap which it traded down into. Let me annotate the chart so you see everything I'm trying to state. So this price trading into the fair value gap, and this at the highs it took out. The highest price run up. There's no need drawing the line at this point, at this high, okay, just this one is okay, but you get the point. So this is actually the start of Friday. Let me annotate that as well. So this run up was taking place during the Asian session, Thursday's Asian session, okay, from 8 p.m. up to the beginning of Friday. Then at the start of Friday, you can see price running down into this fair value gap. Then price traded higher again, taking out this high, traded above this high, and then created another fair value gap, okay, prior to the London session, prior to Friday's London session. So this is Friday's London session. Just going to back this right here, okay. After running up these highs, created another fair value gap, which he traded down into and used this fair value gap to work his way upward. Now let's go into this fair value gap and see. Also, if you notice, you can see this rundown in price taking out this low right here, even on the 15-minute time frame. So you know something took play in price, which we can't really see clearly on the 15-minute time frame, but I guess going down to the 1-minute time frame, we'll be able to see the story behind that movement in price. Now this is how it looks. So this is the key zone for the London session from 2 a.m. to 5. Okay, 5 is way right here. Okay, this is the key zone. And you can see price taking out this low, okay, then rallying up, then rally down. Okay, there's no visible fair value gap right here. There are so many inefficiencies, so many fair value gaps, small fair value gaps right here. But what I can see from this is an order block. Okay, see this rundown in price, this down close consecutive candles, then followed by these up close candles. Okay, this is an order block. It changes the state of delivery in price. Okay, so these are sell side delivery being offered, followed by buy side delivery. So the moment this green candles, this up close candle trades above the open of this down close candle, okay, validate it as an order block. Let's see the 3 minutes and 5 minutes to see how it looks. Okay, on the 3 minutes you can see this order block clearly. Okay, this down close candle. On the 3 minutes, it's just one down close candle, followed by 3 consecutive up close candles. Okay, so this is an order block, and this is happening in the London session. It's happening in the London session, and this is ICT 2022 model as well. Okay, rundown in price to take out sell side liquidity. Okay, then price it rallies up. Okay, trades into an inefficiency, and actually we can also spot an order block right here on the, let me take this off. What just happened? We can spot an, no, sorry, we can spot a fair value gap on the 3 minute time frame. Let me see the 5 minutes how it looks. Okay, no, 5 minutes I can only see another block, but on the 3 minute time frame you can spot a fair value gap. This is it. I think I like yellow more. So this is the fair value gap. Okay, and we have to give room for the volume imbalance as well. So it will be looking like this. Okay, so price ran down. Okay, took out this low, rallies up, created an order block along with a fair value gap below, traded down into the order block and also the fair value gap, okay, to rally up. Also, there is also an order block right here. See this down close candle followed by these up close candles, this consecutive up close candle. This is also an order block. You see how price respects this. And if you notice, this rundown in price and this run up is taking place at a very significant time. Okay, it's taking place at the London silver bullet time window. So the time for the London bullet, the London silver bullet time window, that's from 3 a.m. to 4 a.m. It's a 1 hour time window. Okay, this is 4 a.m. You can see exactly at 3 a.m. price takes out this low, okay, to take out buy side sell side liquidity. Then during this time window, okay, that was when price rallies up, created the fair value gap, which it traded down into, okay, and used to bounce its way up. So that's it for the London session. Let's back to the 15-minute time frame. Okay, so like I said, on the 15-minute time frame, okay, price traded above this high from the fair value gap, traded into the fair value gap, traded above this high, and this fair value gap which it created, okay, traded into the fair value gap and worked its way during the London session. Okay, this is the London session which I showed you on a 1 minute time frame. Our price made use of the silver bullet time window, okay, to rally up. Then this is the New York session. The New York session. So after 8:30, this is 8:30. So after 8:30, you can see a rundown in price to take out this low and this low, also to trade into this inefficiency right here in price. Let me bring this out. This is a BC, buy side imbalance, sell side inefficiency. So price traded into this inefficiency during the New York AM session, while taking out this low and this low, taking out sell side liquidity. So on the 15-minute time frame, while price was rallying up, you can see this other block, down close consecutive candles followed by an up close candle, okay, which price traded down into the down close consecutive candles, which is the other block. Let me bring it out, and we'll see how this looks on a 1 hour time frame. This actually is the Friday's first presented fair value gap, and you know how first presented fair value gap are actually formed. For those that are new, I will be explaining briefly on how we got this Friday's first presented fair value gap. So it's actually the first fair value gap that is formed after the market open. The market open is 9:30 a.m. Okay, so after 9:30 a.m., the first fair value gap that forms with a displacement, that's your first presented fair value gap, and this is Friday. That's why it's tagged Friday's first presented fair value gap. So down to the 1 minute time frame, let's see how this was formed. Okay, so this is 9:30. This is the 9:30 candle right here. This, okay, and the first fair value gap that is being formed after this candle, okay, after this 9:30 candle, the first fair value gap that is formed with a displacement, and you can see how I drew it. I gave room for the volume imbalance, okay, volume imbalance gap between the body of two different candles, okay. So you have to give room for volume imbalance, not drawing it like this. Drawing it like this is not actually correct. This is the correct way to draw it. And you can keep your first presented fair value gap for each days for like up to a week. They should have a lifespan, let's say for at least 5 days. Oh, sorry, for at least 3 days. Okay, and you see how price makes use of these levels. These are very key levels which price makes use of. Why price is either rallying up or rallying down. Price makes good use of them. And yes, here's something I do. The first presented fair value gap that is formed at the first trading day of the month, I extend that one, okay, throughout the month. Then the first presented fair value gap that is formed at the first trading day, that's on Monday, I keep that and I extend it throughout the week, and I keep it throughout the week. Then the one formed the first one formed during the first trading day of the month, I extend it and I keep it for the whole month, and price makes use of that of them as long as price trades around that range in price. Okay, as long as price trades around that range, price is going to make use of them. And this is the one formed on Friday, and you can see, okay, after 8:30 price took out this low, taking out sell side liquidity. Also price took out this low as well. Should I just clone this? Clone. Okay, that's easy. And before I go on, you should always remember to set your time zone at New York time zone. Your time zone should be set to New York time zone. So go to your settings and change your time, okay, to New York. Here's it, time zone. Mine is at New York time zone right here. So change yours to New York time zone to get everything correctly, okay, because the market works with time and then price. So when your time zone is not correct, okay, this model right here where I do my back test is not going to work for you. And also, if you've gotten some value so far, you watched the video up to this point, shout out to you, and drop a like, subscribe to the channel, and I'll be dropping more amazing backtest videos. And for those of you who don't know, this is actually 6th of February. This is NFP Friday. NFP Friday, which can be a very challenging day to trade. Okay, so ICT, which is Michael Huddleston, will actually advise new traders not to trade on these days. Okay, when it's NFP, when it's a NFP week, he will advise you not to trade on Thursday and on Friday for that NFP week. So you can trade Monday, especially if you're a day trader, Monday, Tuesday, Wednesday. Okay, so when you've gotten something from Wednesday, Tuesday, or Wednesday, from Monday, Tuesday, or Wednesday, okay, you don't trade on Thursday and Friday if you're a new trader. So experience, because sometimes on NFP Fridays it can be deadly. Even today that looks clean, whereby I'm doing the back test, there are some traders, there are so many traders, not some, so many traders that are actually caught off guard on days like this. Okay, so that's that. So price taking out this low, these lows, and these lows also, and trading into this 15 minutes BC, right? Let's go back to the 15 minutes and see this clearly. Okay, this was the first sell side taking, second sell side taking, and trading into this 15 minutes BC, sorry, buy side imbalance, sell side inefficiency. Sell side inefficiency in the sense that buy side delivery has been offered and price is going down to offer sell side delivery, though not trading fully into the gap, just at the upper quadrant of it. Back to the 1 minute time frame, 1 minute charts. Okay, and after price took out the lows, the sell side, first sell side, second sell side, and traded down into the inefficiency, you can see the displacement upward, okay, showing the willingness of price to rally up. Okay, and this is the Friday's first presented fair value gap. First fair value gap formed after the market open. This is the market open 9:30 a.m. and if your time is not set to New York time zone, okay, you won't get this correctly. Your 9:30 a.m. will be different from mine. Okay, but if yours is set to New York time zone, it will be the same time, same candle, and same everything, same chart. Okay, and you can see the first fair value gap, which was formed after the displacement upward, was actually our first presented fair value gap. Now, how is that? Okay, and you see price trading down into it. Okay, and rallying up, trading down using the first presented fair value gap, trading down into it multiple times. This was the last time it traded into it before it displaced higher. And also this was happening during the New York AM silver bullet time window. Let me make this red. The silver bullet time window. New York AM silver bullet time window, it's also a 1 hour time window, okay, from 10 a.m. to 11 a.m. So this is it. So before 11 a.m. price tapped in to the Friday first presented fair value gap for the last time before it rallied up. So you can see how the candles respects the first presented fair value gap. Okay, after trading deep into it. Okay, this was the first time, second time, and the third time it was just hanging at the upper quadrant of it. And the fourth time, just trading few ticks into it, and it rallies up, way up. Let's say this on the 5-minute time frame. I'm curious of how it looks. I actually didn't trade today for this day. Okay, so that's why I'm actually curious of price right now. So let me take this off. So on the 5-minute time frame, this is actually an order block. You see these down close candles, consecutive candles, and followed by this up close candle. Okay, you can see a small volume balance right here. That's not our discussion for now. For those that are advanced and have gone far using ICT concepts, they will know how price makes use of this volume balance. Okay, so this is the 5-minute order block, and this order line right here was a 15-minute order block. Right here, this down close candles. Okay, it's supposed to be somewhere here. So the moment price trades above this, okay, above this open, okay, validate it as an order block. Back to the 5-minute time frame. Okay, this is also an order block happening in the New York AM silver bullet time window. See these down close candles, not candles, sorry, candles. This is a candle, just one down close candle, followed by these up close candles, 1, 2. Okay, this is an order block as well on the 5-minute time frame. The price makes use of it. That was when price traded down to the Friday's first presented fair value gap one last time before rallying up. Okay, and you see how price respects this order block as well. So apart from the fair value gap and the order block, there are so many PD arrays. Okay, there are so many ICT PD arrays. ICT has so many PD arrays which price makes use of. But if you get used to these two, these are the major two I make use of. Okay, out of all of them, I actually know most of them as thoughts. Okay, and I practice with them as well. Sometimes I do trade with them, but the other block and the fair value gap, those are my major ones I make use of. And finally, price trading up into this orange rectangle, which are the 4-hour. You can see it's an inefficiency, a CB actually, buy side, sell side imbalance, buy side inefficiency, which means price has offered sell side delivery and price is offering buy side delivery. So I'll be looking for next week. I'll be looking for price to draw into this inefficiency, this CB right here, and also the February 1st presented fair value gap. Like I told you, I extend the first presented fair value gap that is formed at like the first trading day of each month. Okay, so this was the first fair value gap formed on February for this month, so I extended this. Okay, and price will make use of this level as well. So this is my next drawn liquidity for next week. I'll be looking for price to rally up into this range. Okay, then if price works its way through this range, then I'll be looking for price to I'll be looking to see if price would want to take out these relative equal highs. Okay, so I hope you found this insightful, and I know you did. So drop a like, subscribe to the channel for those that are new and those who haven't subscribed yet, and see you next time. Have a productive week.